Okay, guys, today we have on Eric Yakes. I'm saying that's correctly.
Yakes, that's correct.
Sorry, I should have asked you before. Yakes. Okay, awesome. From Epoch venture capital firm, and you can see this nice background he has. Like a really good setup, I must say. It's the best setup I've ever encountered doing the podcast.
Our intern did it this summer, so we're excited about it.
Yeah, it looks great. Okay, Eric I came across him on Twitter, and he writes a lot about sort of this, hyper Bitcoinized financial economy, and he's also a venture investor. So this is a perfect guest for the pod. Eric, welcome. If you don't mind introducing yourself, give us a bit of background, and then what are you doing now?
Yeah, totally. I think probably given some of the crowd that is in broader crypto, I feel like the distinction between my background and that market is probably more that there's typically more people that came from finance in Bitcoin than people who came from tech that are in crypto. So that's kind of one of the primary distinctions is, I was a former finance bro. I worked in this kind of this unique area where it's called corporate restructuring. We're the guys who deal with all the shittiest, hardest circumstances for large companies when they happen. So the first company I worked for, we would turn around or take through bankruptcy, the largest companies in the world, basically. The partners that I worked under were the best in the world at doing this. It's these crazy guys who your CEO gets ousted. You have this guy come in and he literally specializes in turning around a sinking ship. And, so we started off doing that, and you encounter a lot of crazy situations. And I went to a private equity fund that specialized in buying out companies that were in these challenging situations. Usually not bankruptcy, but just this company's kind of having a slow death, and some really big changes need to happen with the company in order for us to monetize it. So you get really good deals basically on these companies because there's very few people who have the skill set of operating expertise and legal expertise and financing expertise to be able to pull off deals like this, because they just get super complex. Most areas, when companies are doing very well, due diligence isn't nearly as important than when companies are doing very poorly, when due diligence is everything, because all they're trying to do is hide skeletons in the closet before you go buy this company. And it gets really nasty from an accounting standpoint. Cause we specialize basically in buying corporate carve outs, which are legacy divisions of larger enterprises that they want to get rid of. So you buy this piece of the pie and there's no back office, and you actually don't even know how much money it makes because so many of its expenses were based on overhead allocations from the parent. So they have their assumptions. We have our assumptions. People really screw with the accounting, and all those details get really, really nasty in terms of hey, we're going to go throw, $200 million at this thing versus they're saying we deserve $300 million. And there's accounting assumptions determining all that. So that's a little bit to give perspective on. It was definitely a very different world, but very heavily literate on the financial side of things in corporate finance. And then, getting into this industry, economics was always my passion, hobby, whatever. It's just the most quantifiable form of philosophy. And it's always been something that it's a framework of thinking that allows you to make decisions about the world that I don't know. It's just really important. And I've always loved it. And the conversations around it, I think, are kind of some of the biggest questions if you're from a practical standpoint today, outside of getting too philosophical. Right. And that eventually led me to Bitcoin. I was into a lot of the economic philosophies that Bitcoiners are into, before I was aware of Bitcoin. When I first heard of Bitcoin, it was posed to me as blockchain technology. And that prevented me from getting in for years because I was just okay, it's some technology. It doesn't produce cash flow. I'm a CFA. I know everything about value investing. This isn't something that I can measure. I wasn't I hate it. I was just this isn't the type of investing that I do. I don't just throw money at things that don't produce money and, people are speculating on. And it wasn't until I heard the idea of no, Bitcoin's an alternative to central banking. And the first time I heard that narrative, I was oh, well, that's a problem I'm acutely aware of. Central banking is, I was just nihilistic at the time. I was this is just how it works. And, I'm going to work in turning around bankrupt companies because that's the world you live in with central banking. And and that's a very profitable area of investing. And that was kind of my perspective. So once I heard this alternative narrative effectively around Bitcoin is when everything turned. And that's what sent me down the rabbit hole. And then that got me into Ethereum and everything. Cause I was just oh, these are better versions of Bitcoin. And there's kind of like this spider web of knowledge I was led into over time. And I was like reading into like delegated proof of stake and like all these other algorithms and like, totally clueless of, what the actual like value drivers were of the protocol. And it took me, that was probably like in 2016 when I was getting into Bitcoin and then started getting into the like 2017 cycle for like crypto. And it really wasn't until like 2018 that I was like, okay, I actually kind of understand what's going on here. And that got me to like focus on Bitcoin. I've never been like a super hardcore Bitcoin maximalist. It's like black and white about everything. But like basically what it boiled down to for me is that the true innovation here is what's happening with Bitcoin. The monetary aspects of it are gravity, and that's going to pull everything else in over the long term. And it's the only thing that I think is worth focusing on to me. I think there's going to be large markets for other things that have happened in crypto, and like whether it emerges through new like cryptographic signature blockchain based protocols or some other alternative is, certainly up for debate. And it's just like not like the proper risk adjusted career decision that I was looking into. And I just don't give a shit about it. Like I give a shit about changing money for the world. Like that's badass. That got me jacked up. Like I quit my job in private equity to take a ton of risk and like be involved in this. And, to be able to trade like securities with cryptographic signatures or real world assets or something is like cool, but like that's not revolutionary. Like what people in Bitcoin care about is like, it's a revolutionary thing. When people joke that like Bitcoiners are, cultists or religious, it's like, yeah, there totally is a group of people in Bitcoin that are like cultists and like religious about it. And that's awesome. Like there's no other industry I'm aware of that really like has that. Like I wouldn't necessarily say I'm one of them, but I'm really glad we have them. Like it's kind of cool. I think like that characteristic is so there's this book called The True Believer by this guy, Eric Hoffer. And he's kind of like a social philosopher who studied parallels with revolutions throughout history and like characteristics that they all had in common. And if you like read through that and compare it to what's happening in Bitcoin, it's just, it's pretty uncanny. It's like very parallel. And that's something that I think is that creates the ultimate. I think when crypto people talk about like community, it's like our community is so strong that it's a global cult. Like you can't really stop things like that. And it is like this revolutionary driver. And that's what I think is super cool about it. I think there's a huge expanse. Like at this point in this year, it's like Bitcoin's kind of, there's so many different people involved. It's so big now that it's really hard to say like what the Bitcoin community even is anymore. But like that initial community that bootstrapped it and like the people who were screaming into the void back in like 2010, 2011, basically like non-devs who were first supporting it, but got like the economic argument for it and like basically propelled it to being, the best performing asset in measurable history, adopted by like the largest financial institution in the world. And, the best like risk adjusted bet you could have possibly made. And I think still is to this day. Like that's crazy. It's just like this historic thing. And like that started by like a revolutionary type, movement that happened around it. So I love Bitcoin. Bitcoin's awesome. I have all my biases and like, and as like an investor, I have my investor hat on for things all the time. And I get into like serious mode and all that. But everything's on the table. I love Bitcoin. That got me involved in the industry. It was just like, I was like, fuck yeah, like this is the real deal. What else am I doing if I'm not working on this? And I got involved and I wrote one of like kind of the earlier economics books. Like the Bitcoin Standard was really the only book that people in the finance world were handing out at that point in time. And I wanted to give something that was a bit more pragmatic and measured and taking less of a theoretical standpoint on making the case for Bitcoin and argue from just like, no, like, let's just like look at history. And there's some theory in it on monetary theory that's important. But we can really identify these pain points from historical patterns. And then let's actually explain how Bitcoin works and not just use like analogies and stuff for it. And so I use that more for like basically like guys from my world who like really want to look under the hood before they start understanding things. And that got me started in the industry. And then I started working on, I thought it was a bit early to get into like Bitcoin venture for a period of time. And then that my perspective changed one kind of around 2023 when it started to seem like stars were lining up a bit more for, DeFi technologies and other technologies to start moving capital on top of the Bitcoin ecosystem. That was one thing. I think the other thing was just I was really wrong about how much more room there was to grow kind of in the more brick and mortar TradFi realm of startups that are going to be creating on-ramps and custodians and, other solutions that are going to bring more Bitcoin adoption. So it was like a combination of those factors that led me to want to get the firm started. And yeah, we're really new. We closed on capital last year and we're funding like seed stage through Series A Bitcoin startups. Our mandate is just anything that supports Bitcoin adoption. Generally speaking, it's like Bitcoin fintech is what we're focused on, but we've invested in a media company and we'll invest in other things that we want to make money at the end of the day, and we want to do it from ways that expand Bitcoin adoption.
Okay, that's a great intro. You answered a lot of questions I had along the way, so that makes it much easier. Okay, before we hop into like some of your most recent writings, which is going to be kind of the bulk of this, what do you find to be the state of Bitcoin venture? There was, like you said early on, there was kind of it was too early in many ways. There was like a fixation with the Lightning Network, and the infra there really needed to be built out. There was competing Lightning implementations, but for the most part, like everyone was focused on this, and the infrastructure wasn't really there. Then we had this like emergence, and people could talk about how organic or inorganic it was, but of this Bitcoin season 2 premise. What do you see right now in terms of like what you're looking at venture wise? Like what do you want to fund? Is it a lot of crypto copycats, or is it? I've looked at your portfolio, so I have some context. But like, talk to me about what you think of the state of Bitcoin venture, like where you want to deploy money in terms of maximizing your returns.
I guess there's like kind of more like anecdotal or one-off arguments that we could get into around specifics for a lot of it. But I guess at a higher level, the way that we're looking at things is Bitcoin is going to be used, and this might make us a bit more distinct from how some of the other Bitcoin-focused VCs are thinking about things. But like our view is just Bitcoin's going to be used as a store of value for a long period of time. The payment use case is, we kind of just view it as a barbell between Bitcoin and stablecoins right now. And and like stablecoin, like a lot of our investments are companies that are using stablecoins in some way, shape, or form too. So it's like we have that involved in our portfolio, but it's like it can include that as a feature within a product, but like the primary use case is being, using Bitcoin in one way, shape, or form. So the store of value piece is the big part that we're focused on. Like we wrote this piece, Bitcoin Marginalism, which is kind of like our founding document for like, here's how we think about the world and why we're focused on Bitcoin. And we just view adoption happening in 3 primary cycles. And us, capital allocators and builders, are the people who determine how far we go up this curve. But there's like 3 curves, 3 S curves. The first S curve is store of value, and just, taking on that market, taking on gold, moving into broader store of value assets, realizing Bitcoin's superior collateral, and just like consuming and pulling in everything because this is like the best way that you can store wealth over time. Once that market's achieved and, people have these like market sizes for all of that, like the reality is that the market size of that is, it's where marginal demand meets marginal supply. And the way that you can back into it, it's going to be a completely different world by the time it's actually like consume that market. So like trying to tack a number on it's like good for your uncle to, get comfortable with it's going to be big. But like that's a reality. It's just going to be so big. And, when this happens, it's just going to be something so much larger than the market size of anything else. And the return potential is huge. And that's just for like the store value market. And then the question is like, what infrastructure around it needs to exist for it to be used more of a medium of exchange over time? And that's a much bigger question, because then there's the theory around like velocity of money and the stability of the asset and how that's all worked over time. Which I can get into a lot of those details, but then that gets into like the medium exchange S curve, and then the final is like unit of account where people start to denominate it. And it doesn't mean it's like this cycle is happening in full in certain situations in certain parts of the world. Like it's being used as a meme exchange in certain communities. It's being used as a unit of account in certain communities, but these are on a micro scale compared to like global dominance. From like a global dominance standpoint, and economists like debate each other to death over what that means to be considered widely accepted and like, things like that. But from that standpoint, it's just like, that's going to take a very long time, but there's going to be little micro instantiations of this type of adoption happening around the world. So some things will come quicker than others, depending on, the constraints of the individuals within those circumstances.
Yeah. Do you feel it sounds like yes, but I'll go ahead and ask this. Do you feel very confident about the medium of exchange use case fully coming into fruition? And I think like the counter argument would be, to the extent that countries can continue to print fiat, they will. And I think a lot of us, I say us, like me, somebody who's, I guess, on the sidelines here, not in ownership, but just in terms of how I approach this, I kind of just hold right now as a store of value. But I'm more okay with that. I think obviously there's people who are fixated on it absolutely necessarily becoming a medium of exchange. But I'm not, like, for example, I guess my point, and this has been kind of objectively true over the past 15 years, is that it doesn't necessarily need to be a medium of exchange to be, to go up and to have, good store value properties. Like how convicted are you on this, like, ultimate medium of exchange and then unit of account? Or do you think that perhaps that's not necessarily the definite end game?
I definitely don't have like complete conviction on the medium exchange use case. I think the revolutionary aspects of Bitcoin will emerge from the medium exchange use case. I think the store of value use case will also be, will also unlock some of the benefits of that. For people to have a permissionless form of store of value is going to act as a deterrence mechanism against other behaviors. And so that's the, multi-trillion-dollar question is, will maturity of Bitcoin in the store of value market, where, just assume hypothetically, everybody who has exposure to Bitcoin as a store of value has some sort of either direct ownership or permissionless way of exiting a system, will that deterrence mechanism be enough to effectively just have governments start keeping their money in check? They're like, all right, you guys win. Like, yeah, we're going to tie our currencies in a fixed rate. We're going to go back to we're going on a Bitcoin standard. Use our stablecoin for this. Or will it start to emerge because governments are going to have such a hard time controlling anybody who wants to trade value with a cryptographic signature on the internet? Now that that's become a standard, is it going to be like a free banking system that emerges from like stablecoins? And you can read into like free banking theory ad nauseum on a lot of these topics. And that was something I spent a good amount of time doing when I was trying to think about this question. I think the reality is I think a free banking system, I guess to probably put it more succinctly, I think that if we build technologies that, and like this is the key phrase, like have a low marginal cost of participation within the system. I think that if we can have that, whether it's like perfectly trustless or all these other variables, I'm not as concerned about. I'm concerned about, can people participate in a low cost way so that it's hyper competitive? And that's kind of the vision that I see, is because we're building this new infrastructure of trading value on cryptographic signatures, to participate in protocols, whatever they may be, whether they're perfectly trustless or not, I think it's just really important that it's hyper competitive and anybody can participate pretty easily. And as long as that happens, I believe the free banking system, if that were to emerge on Bitcoin, would serve the consumer better than any system we've seen historically. And if you look at the historical systems that have done this, they've served the consumer very, very well. Like the most popular one, it's basically like Canada and the Scottish systems during the 19th century. And like, it's been a while since I've read this, but I think like the statistic was basically within about a century, 32,000 pounds and not inflation adjusted. So a lot more back then, but 32,000 pounds worth of value was effectively lost to the consumer in the Scottish free banking system from their deposits. Like a very small percentage of the amount of value that had existed within that over that century, because when banks go bankrupt, other banks buy them. The consumer doesn't really lose. And if you have a competitive enough distributed market, everybody's keeping each other in check from market mechanisms. And like, that's what all the theory is based around, is all these different incentives that exist and allowed those to function very, very well. The problem with all these systems is that they don't exist in a vacuum. So it's like, if the East and the West were to like divide and we were to have like a pretty strong system emerging, but then all of a sudden there's just like a totalitarian regime that's like dominating the East for one way, shape, or form because they, have nationalized every access point to the internet or something, then that can really change how the competitive dynamics of the system work for them. And that's a whole rabbit hole discussion. But to go back and like answer your point, I think that it's just like it's a gray area of what it means to be used as a medium exchange. Like if Bitcoin is being used in the reserves of all of these different free banks, then I think eventually as that matures, they'll just start tying it to that value. Like once Bitcoin is like, if Bitcoin becomes $100 trillion asset in today's terms, like it's going to be a highly, highly stable asset. And so many people are going to be, or so many large organizations are going to be putting a significant amount of capital. Basically, its scale, it has this like, it's literally like a flywheel is just not benefiting its scale right now because it doesn't have, it's better than gold in all these characteristics. It just doesn't have depth of liquidity in its capital markets yet that can support like you can with gold. Like you can go liquidate 100 billion in gold and not move the market too much. Whereas like with Bitcoin, you can't do that yet. It's still too infant relative to the market sizes of it. So like all of its problems get solved as it grows, basically. And then all of its other benefits just are in that much higher contrast to any other alternative store value asset. Like by the time it's 100 trillion, like very few things are going to be moving the market. And I think the main thing we're witnessing right now is we're starting to see that like cultural shift happening where I think we're seeing the beginnings of people just being like, oh, I should probably save a little bit of money in Bitcoin. Like it's something that's been not written off immediately by broader society. It's like something people are like, oh, I should look into it. And I think in like a decade, it's going to be like, oh, I should invest in stocks. I should invest in bonds, maybe not even bonds at that point. I should own my house and I should probably be saving money in like Bitcoin to some degree. Like I think we're going to get there in the not too distant future. And once it's a cultural phenomenon like that, like it just like consumes things over time. But yeah, I think like the medium exchange side of it is something where it could be a reserve. It could be being directly traded because we have technology that enables that. It really is a technology question. And I think the possibilities boil down to what we can build. I have a lot of confidence. Like if the solutions are what they are today, in a decade from now, I have a lot of confidence that we can really build certain trustless solutions that are going to be viable for competitive markets to emerge around as like service providers that support them.
How do you feel like in that vein that you were just talking about, people are going to invest in stocks, maybe or maybe not bonds, and they're going to be saving in Bitcoin. How much do you ascribe to the theory that Bitcoin success will mean the demonetization of a lot of these other assets that we ascribe some version of a monetary premium to right now? The S&P 500, real estate, random collectibles, cars, wines, right? Whatever. Like all of these assets people ostensibly are storing wealth in, when in reality they are, not true stores of value. They have different properties, but like we're sort of forced to store value in them as a function of fiat inflation. Do you mainly believe in this? Because I mean, this is something that I don't like get out there and scream this a lot because I think people get annoyed by this, but I think there's a lot of validity to this idea that a lot of assets become demonetized once you have a real way to store value that's, like essentially completely permissionless.
Yeah, 100%. I completely agree with it. There is like the short way of explaining the problem is just artificially manipulating the price of value, lowering interest rates, being a central bank, artificially lowering that price forces people to spend money on things that they otherwise wouldn't and invest in things that they otherwise wouldn't. You can't keep up with the pace of inflation and have a savings account. It's just impossible. So there's all this capital allocation, there's all this investment happening just to stay above water because we pushed the tide too high. And eventually the tide's going to come back down. And that's when, having a solution or an escape valve kind of like Bitcoin is really important in that situation. And I completely agree. I just think that I see it anecdotally happening right now. And like, that's one of the things that maybe I shouldn't look at it as much, but I really do like to see anecdotal evidence in my life. When I start to like ask myself and like baseline, is it just our echo chamber or something that's saying this, or is it happening? It's just like, a lot of people are like, okay, there's these companies coming out that are like, we'll, give you a loan where you can take a home equity line effectively on your house and go put it in Bitcoin, and we're going to get some of the upside and cover you on the downside or something. And we talk to startups that are doing this right now, and it's a cool idea, and that's happening. And then there's also just a lot of people that are like, sell your house, rent, put the money into Bitcoin, thank yourself later. And as long as like the capital appreciation of Bitcoin in value terms is outperforming how much you're kind of paying in rent every year, then you're going to do pretty well on that. And it's definitely something that's happening. And I think that that's going to happen in a much more significant way. If there's one thing that got me into Bitcoin, it was just how bloated central banks have pushed markets, and me asking myself, how does it end? Like me and one of my buddies, we were looking into like shorting Japanese equities when we were reading into just like Bank of Japan and them, like back then, this was like 2016, I think. And at that point in time, Bank of Japan owned like 25% of the outstanding like notional value of Japanese equity markets. And we're just like, okay, well, that's stupid. Like, how does this end? And then you just read into it and you're just like, I don't know. And even if I did know, I don't know how to time that correctly. Right. And like short this. And then you realize that like, oh, Bitcoin is just like this way where you don't have to time it correctly. And it's like actually kind of like a mechanism, I think, to like short some of that behavior within like bloated equity and credit markets. And so it's like the way that like this influencer Greg Foss described it was just like, it's like having a put option with no theta. There's no actual like timing that you need on it. And I think that's a good way of kind of like framing some of the risk dynamics around it.
Okay, let's move on to this very long piece you wrote. I guess you do this maybe once a year. You write like sort of a breakdown this year. So I told you beforehand, I was transparently honest. It's 130 pages. So I read maybe 40% and then stuck the whole thing into ChatGPT and, but I got a very good overview. The essence of it is you breaking down the future of what you consider to be sort of the Bitcoin banking system. First off, what is who's like kind of the target audience here? It read to me like more in the vein of what you were talking about with coming from TradFi and attempting to convey a lot of these principles to people who may come from traditional finance or just different areas altogether. But like, who is this for in sort of your opinion?
Yeah, it's for like, primarily we wrote this because we want like bank executives to read it, and we want founders and like fintech people who are kind of in those areas to read it. We like, one of the goals that I have is to try to like, I want to use like, effort and, work in, just like clear thinking to like show the, other markets, what makes Bitcoin legitimate, and try to like speak about things in their terms. And that was kind of our goal with this piece, was just like when the, Trump administration entered office and, SAB 121 was repealed, and everybody's like, okay, this is going to change. And for context for listeners, it's just like, SEC guidance that was put under basically a choke point operation by the Biden administration via the SEC under Gensler. What it did was it forced any sort of bank that wanted to provide digital assets to hold custody of those funds on their balance sheet as a liability. Yeah. And which you don't normally do. And when you don't normally do that, it's an off-balance sheet item, and that means it doesn't impact your risk metrics. So like when you're being assessed by regulators to say, do you meet these certain ratios and thresholds, having balance sheets that are if custody was to move on a balance sheet, they wouldn't meet any of those metrics. So like this kind of just made it a non-starter for a lot of banks to want to adopt digital assets in the first place. And then you can read into Custodia Bank and everything Caitlin Long had to deal with. So anyways, Trump enters and they repeal that concern. It's like everybody's like, okay, banks are coming, and we're like asking ourselves internally as a firm, like, okay, what does this actually mean? What does it mean when people say banks are coming? And that sent us down just like a long rabbit hole. Like we kind of planned on writing a piece that we'd put out in May, and then we just kind of kept writing more and more. I have a problem with doing that. We wrote the thing with the former CTO of Silvergate. So they were, the ones who built the Send network and like all of the exchange settlement. And, they're banking a lot of the, windfall that happened within the crypto industry. So I was, we're just close with him. I'm like, dude, let's steel man this thing and let's see how this impacts Bitcoin. Let's talk stablecoins. So it was primarily myself and him, and then we had Sagun Garg, who's really strong in fintech and in Bitcoin, and then my operating partner VJ, who's strong on the regulatory side. And we kind of all just like collaborated for like 6 months and wrote this 30,000 word beast. And it's just like everything you would want to know, basically, if you're somebody who's thinking about what happens when banks move into Bitcoin or broader digital assets and stablecoins. Like a lot of our learnings are things that you can kind of, or ascendant into broader digital asset implications as well, depending on the motivations of the bank. I think that a lot of banks are probably going to be focused on barbell strategies, though, in terms of like what they choose to support. I don't think it'll be as much like we want to be comprehensive like the exchanges have been. They're going to be like following a Pareto rule and saying like, okay, Bitcoin, stablecoins, Ethereum, things kind of like that.
Yeah. Okay. So, and also just for a little bit of context for listeners, I didn't really explain this at the beginning. What I found interesting about this piece was, I think this was and I've heard you kind of explain this before. I think you have a pretty pragmatic approach. You mentioned like the degree of trustlessness with certain, financial applications. Like at the end of the day, what you're kind of focused on is Bitcoin, the asset, and how that's integrated all across different trust models. And so in terms of the context here, I think this was like quite fascinating for me because I'm very used to the crypto side where, ostensibly people are trying to be as trustless as possible. Whether or not that's always the case is like another separate point, but that is much more like the decentralization aspect. And this conversely was a piece that was like, okay, look, we have this banking system now, this two-tiered banking system. And here's where we think this kind of moves towards a hybrid model and like where Bitcoin starts to come into banks versus banks coming into DeFi or whatever. Okay, so like maybe you can start there. That was a bit long-winded and not very articulate, but maybe you can start there and like outline like the kind of overarching themes you have wherever you want to start. I guess like the easiest one is like Bitcoin has this monetary base and like where banks approach Bitcoin from there, and then you can go wherever you want.
Yeah. So, and that's something too. When we're talking to founders and businesses, right? Like there's two fundamental visions of the world that I think some people think collide, but I don't necessarily view that. It's just kind of strategically different ways of viewing adoption within Bitcoin. Both are happening. One vision is the traditional system adopting Bitcoin directly, integrating it into everything it does. The other is building everything digitally native from the ground up, however you define digitally native. We kind of have a general gist around what that means. So this is focused on that integration into the traditional system and really walking through how that system could evolve over time, what banks are going to think about the asset, and what that means for like when Bitcoin stablecoins get adopted, how Bitcoin is going to ultimately grow within this system. And that's based around a lot of our fundamental theory of the monetary incentives of Bitcoin are going to cause it to continue to expand. We view it as just like a virus that starts infecting everything. And like, you just can't stop it at a certain point. So like when people in the Bitcoin world are like, stablecoins are kind of a Trojan horse for Bitcoin. We're like, let's actually walk through how that could actually happen, or if this is just like narrative and pandering. And we walk through some of the fundamental drivers that, on net, I'm sure you could make other arguments other ways. We try to be comprehensive about Bitcoin. We certainly weren't comprehensive about every possible scenario. But on net, there's some fundamental drivers that we think are going to give Bitcoin kind of an advantage and allow it to spread. And I think, today, if you talk to an economist who reads into banking, there's actually not that many out there. It's not a lot of people care that much about banking for obvious reasons. And, but if you talk about people who study this and put this into like frameworks, it's like we have a two-tier banking structure within our system. And what does that mean? At a global level, we have central banks that run, large developed economies. They set monetary policy. They set certain standards. They, watch and regulate certain banks, but primarily like they're producing the money, right? And then you have a commercial banking layer. And the commercial banks all plug into the central banks. And then even beyond that, you have other correspondent banks. So it's basically like in the US, we have the Federal Reserve, and then you have certain banks that are given a Federal Reserve master account. That means they plug into the Federal Reserve Bank. And then not every bank gets that. And the ones that don't have to go through a bank that does if they want to get access to federal bank reserves. So those banks in the middle are called correspondent banks. The same thing happens for access to international banks and other currencies. You have correspondent banks that'll be like, okay, so we have a Federal Reserve master account and we also have a Bank of England master account. So if you want to have like FX trades and all this stuff, that's settling through these correspondent banks. There's this bank called CLS, which has like master accounts everywhere. We kind of peg them in the report as being like, when CLS like adopts like Bitcoin integration, that's just going to be like the first argument for Bitcoin's just like a new central bank plugin, basically. Because the way that we view this from this banking perspective is you just have a bunch of central banks set with like fiat monetary policy around the world. And then you have Bitcoin, which has just like this truly neutral, predictable, fixed supply. So it's going to be like the neutral bank that people start looking at. It's going to be highly differentiated in that regard. And we kind of, walk into some of the implications of that. So 2 tiers, central banks, commercial banks. People plug into things that they don't have access to through correspondent banks. And then you have fintech, which is kind of just like, the UI layer layered on top of all of this. If you want final settlement, if you want anything to happen, then you have to go through the banking system in some way, shape, or form. One of the big things with like crypto is it's like kind of circumventing all of that once we had value that emerged out of it. So that's kind of like the main framework, and that like I could kind of go into what stablecoins are basically doing from like
we hear this all the time. Stablecoins are a Trojan horse for Bitcoin, and then you get I think it's more of an ideological position, but you get very strong pushback on that, saying that stablecoins are this dystopian financial surveillance technology that is, de facto CBDCs that are intended to just do this in a way that the public won't notice. So I'm just giving the anti-stablecoin argument. But yeah, so like I'm interested. Walk me through your kind of rationale behind stablecoins.
So stablecoins, I guess I'll kind of address that criticism first. Like I remember when I first heard this and I was thinking about this criticism. And it's something that I really just every dollar, I think what people miss when they're like, okay, stablecoins are creating this dystopian world of surveillance and whatnot. I think they really need to read our piece, because you really actually see how different a stablecoin is from the banking system. And the main thing is just every dollar that exits the banking system into stablecoins, aka every dollar that's not being used by some aspect of the banking system, it's going to be overlap between the two. But either it's the same thing, basically, or it's something that has moved somebody out of the banking system into a stablecoin. And that's much better than the banking system. So like we have this chart showing the 2 tiers, and we have like the correspondent banks. And then there's kind of above the tier 1 where the central banks are. What are the central banks doing? They're interacting with the federal government. They're buying US dollar denominated debt. And then they buy it and then they convert it into a reserve. And then once it's a reserve, then commercial banks can use it as liquidity, blah, 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 blah. Don't need to go through all the mechanics of the banking system. But the point is that it's a way of monetizing federal government debt in some way, shape, or form. And what stablecoins are doing is they're cutting out all that. They're like, we're just going to buy the debt directly. So we're cutting out this 2-tier banking system. We're buying it directly. There is you can technically do it, but like the way that treasury auctions work, sometimes you do still have to go through a bank. So at scale, it can kind of be both, basically. But what they're doing is they're cutting out like a lot of the functions of banks. And like we, took some, one of the trade associations for, the term's escaping me. Community banks. The community bank, like trade association, like put this letter out prior to the passing of Genius. They're just like,
yeah, I saw this recently too.
Yeah, that was going off, and they're just like literally like you cannot give stablecoins Fed master accounts, because when they get that, it cuts out like the commercial banking layer.
They're trying to take it back now too. Yeah, I saw this.
Totally. Yeah, because it's literally going to like cut out the commercial banking layer. So regardless of your opinions, at a minimum, if stablecoins do mature to the state that you would assume, and like kind of the dystopian people are assuming that, then you are disintermediating to a degree,
for sure.
At worst. And like, so that is good on net. And I think that like the idea that it's going to have like perpetuate US dollar dominance globally, That's something I'm like really excited about. I think like, because what I boil like the argument against stablecoin, or the dystopian viewpoint of stablecoins is that like an argument that like, what are stablecoins doing? They're going to proliferate the adoption of, and some people view this as being overhyped, and maybe it is, but assuming it is or isn't, to some degree, they're going to expand the demand and the usage of using cryptographic signatures for payments and for settlement. And that's huge because now all of a sudden the rails and infrastructure are being built out where the case could be made. If Bitcoin is a better form of money, then it will win the more infrastructure and access that happens for it. So like, you know, we put this meme in the report that's the Lord of the Rings meme of the king of Rohan when he's like, you know, during the final battle and they're like coming in and he's just like, let them come. And like, we put that meme in there of let them come. It's just like, yeah, like we're ready for that. We think Bitcoin's better money. And the way that we kind of view it changing over time is it's not some sort of thing where people are like, oh, I like Bitcoin now and I don't like stablecoins. It's something that's going to happen like gradually throughout the systems where Bitcoin's just going to kind of like slowly emerge. It's going to be this new central bank and correspondent banks are going to start plugging into it. We kind of view that as like step one is it's going to be some sort of bank adoption. And then for like the bank execs in the piece, we have literally like an overview of the architecture of core banking system and payment hubs. And here's how it plugs into all of these things. And we do a technical deep dive for like founders and stuff for people that are kind of interested in how that works or you want to build solutions related to that. And so we do this architecture of like, here's how kind of correspondent banks will be plugging into Bitcoin. And then what happens is a bunch of people start to get like more Bitcoin adoption. It's like, okay, so if we have stablecoin providers that are starting to, you know, issue, and what are they going to be competing on? Well, there's, you know, Genius, and mind you, this argument's kind of based on the long term, right? But like here in the US, Genius passed. It basically said, you know, US stablecoin issuers, if you want to have a stablecoin in the US, we have a certain grace period before this gets put into effect. I think it's like 18 months. But we have a grace period, and then, but eventually you need to be only purchasing short duration US dollar denominated liabilities or US government dollar denominated liabilities. And you can't pay interest on your stablecoin. And then they're creating this new class, which is all this is regulatory ring fencing for the banks, right? Like, but the banks, they get to issue what's called a tokenized deposit. And these are kind of like CBDCs basically. In tokenized reserve deposits, which will be if the central banks issue them, which we use the acronym TURDS for. And like these things are going to be the interest paying versions of stablecoins. So Genius just like drew a line in the sand and said, banks get to pay interest, stablecoin providers that are non-bank don't. So now stablecoin providers are going to be looking for banking licenses, and you know, JP Morgan issued on Base their JPM tokenized deposit beta, basically, that's going to be like this type of a structure. So we see that there's going to be interest being paid and competition being paid based on these, because what people have realized by circumventing the intermediaries in this like regulatory captured system is wait, we should be getting a lot more interest, and we should be cutting these guys out of the middle and passing that along to consumers. So like now that competitive dynamic's happening, because it's a lot easier to build these directions, and this competition happened basically without banking licenses being required, like that's going to expand. That's going to expand around the world. And whether or not, you know, Genius exists and we have an onshore and an offshore market for it, competition is going to start happening where it's going to be like, okay, if you hold government denominated assets, and that is what your US dollar is, like that is the money. It's like we're basically going to start like more directly trading the government denominated asset, which is it's a kind of a big mind fuck for people, because when you realize that, it's kind of like, okay, so why aren't we just trading treasuries directly, right?
Yeah.
Like
yeah.
And that's like the main thing, and this is kind of like how you could view the value out of a stablecoin basically is treasure, like debt isn't fungible. Debt,
right, exactly. That's what I was going to say. It's like a lot of people think like the largest asset in the world is U.S. Treasuries, but it's non-fungible, right? Like gold actually truly is like sorry. I was just thinking about that recently. Go ahead.
That's a great point. Yeah. Like the fungibility of gold can like outsize any particular like, you know, government debt issuance. That's actually a really interesting question. I would like to look into that. Yeah.
No, it does.
It does. Okay. Yeah. That would make sense. Yeah.
There's no, because they all have different durations. This is why you can't really make this, like, this is what's kind of like ironic, right? Like gold has 5 or 6x the market cap of Nvidia, right? The second largest are the second largest asset in the world. Like, people don't realize this, right? Because we're so used to the swath of real estate and treasuries, and it's like in reality, all those are like, functionally
These
NFTs.
are fungible assets.
Right, exactly. They're acoustic NFTs. Sorry, go on. I didn't mean to sidetrack you.
So that's a great point. So what are stablecoins doing? They're blending a bunch of these durations together, and they're creating like, in theory, the idea is they're creating the optimal duration for you. This is basically what pension fund managers do when they're trying to match a liability. It's like stablecoins are kind of trying to do the same thing with U.S. government debt, making a fungible token of a blend of all the debt. And then people are going to be trading that. So it is akin to like trading treasuries directly, particularly if the interest is being passed along. And now that we're going to have this like globally competitive system around that, you could look at Tether's reserves today, and it's about like 5% of that is in Bitcoin. And this was kind of like one of the key insights that we drew out within the paper is, okay, so if Bitcoin's going to be better money, and if people are using it in reserves, the largest stablecoin provider today is, and if Tether gets a banking license or whatever these scenarios are, what is going to be the reserve asset that ultimately allows for the highest paying interest over time? And it's going to start to shift towards that type of a motivation, as opposed to being just purely some sort of government denominated asset. And then you look at, and I honestly don't like saying this because I really don't like getting into like all the Bitcoin treasury bullshit and like, the Saylor worship and stuff like that. But it's like, what Saylor did with his most recent issuance is effectively, it's like the proto version of what this model would look like for stablecoins, where he's just like, it's Bitcoin. Bitcoin's going to go up at 30% CAGR or whatever the fuck it's going to be. And we're going to be able to pay out a much higher interest at a much shorter duration than anybody else with that as a reserve asset. So it's kind of like the proto version of what like a high reserved stablecoin in Bitcoin is going to be. So if we're competing on passing along the most interest to people, and then like Bitcoin's going to start to gradually expand within reserves. That's our argument, is like, that's how it's going to pan out over time. And there's other drivers beyond just Bitcoin's going to go up a lot for that. Permissionless network, settlement finality, like get ready for onshore and offshore markets to happen, and settlement finality of those debt denominated assets. It's going to be really important to the value of an offshore stablecoin provider. Like, look at the Eurodollar system. Look at how does the U.S. government control this? Access to U.S. government liabilities during the pandemic. Like, they have to open all these windows to like give enough like liquidity to offshore banks that have just been issuing Eurodollars, which are just like numbers on an account that actually needs some sort of like treasury to fulfill on the back end. And so like that problem doesn't go away with stablecoins. So like stablecoins aren't settlement finality because of that. And and like that'll be another key advantage that Bitcoin's going to have as a reserve asset over time, is like you do get the actual finality of the asset, and you're not going to be on some government controlled system, whether it's US or anywhere else. So like looking at a lot of these variables, we just make the case like, we think Bitcoin is going to be the best money in the world, and we can kind of play through some of this game theory and realize that this is the avenue through which Bitcoin kind of spreads. Stablecoins are doing a huge part of, building out the infrastructure for that. And this is like a great mechanism towards bridging towards this new future that everybody's looking at. And maybe government securities remain in much stronger demand. And if that is the case, like, we just want technologies to exist that allow that decision to happen within a competitive market over the long term.
The Gort Show is sponsored by Ellipsis Labs, who I've been following for 3 years now. They're one of the strongest teams I know in crypto. Ellipsis Labs is a small engineering team with a flat structure. They build complex systems, primarily in Rust. For engineers who like challenges, here's the kind of problem they solve. A layer 2 blockchain needs to maintain 100 million accounts and generate a state root after each transaction batch. The root must be built within 50 milliseconds. How would you design the system to ensure the root construction is fast enough? High-performance challenges are core to Ellipsis Labs' mission as they build modern crypto finance. They believe finance needs more than an upgrade. It needs a complete rewrite. The success of their first product, Phoenix V1, speaks for itself, doing over $70 billion in organic trading volume. Now, Ellipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. I know this team personally, and I like them because they're unique in the crypto space. They have a long-term focus, they work in person from their New York City headquarters, and they're here to build products that fundamentally change the world of finance. If you want to learn more about their open roles, go to ellipsislabs.xyz/careers. I think I also, what you were talking about with the treasuries and like the competition to pay yield, it's sort of similar to, like if you look at a proof of stake system, if everybody stakes, there's no yield, right? Like it is reliant upon
Right.
some portion. So it's like a little bit similar with stable coins, I think, where eventually everybody's receiving yield, and then you really need a better treasury asset, in my opinion. And that's how I envision this. Like, because stable coins will ultimately allow everyone to stake their US dollars, right? With paying yield. And I like view it as a similar like long run trajectory. I don't know how much that made sense, but in my head it makes a lot of sense. Okay.
No, I think that's interesting. It's cool. What I love about a lot of the things that have been learned in crypto is it gives people this framework, like a novel framework for thinking about how the traditional system kind of works. And I think that's a good parallel. Just like, if everybody's staking, then there's no kind of redistribution of the inflation of the asset. And then it's more like, it's akin also to like issuing at the money equity, basically without debt or anything. And you're just like expanding the debt, buying more Bitcoin. Right. It's all just like a cycle. It's not really doing anything. And it's just changing like nominal values effectively. So that's an interesting point, right? Because like, that's really the key argument here, is that the US dollar demand has expanded to the point that it has globally. There's a lot of indicators that show it's been gradually declining over the past decade or two. And people like, there's this whole camp of macro bros who all make arguments for how dollar denomination is going to continue to expand. And the way that I view all of that is just like, if you view the market of money as a competitive market globally, and there are certain constraints and frictions for, why you would use one money versus another, dollar demand expanded really far. There's certainly demand for it from like a fundamental standpoint, and it could continue to expand to a degree. But I think to your point, it'd be like, if we dollarize the world, like, whatever Scott Besson thinks is going to be happening with the dollar from stablecoins, like if that were to happen, then it's almost like dollar denominated debt would just be like, everybody's just like, or treasuries would just be like, everybody's already staked and there's no wealth redistribution to have anymore. And and that's a really good way of putting it. And then it's just like, there's no more wealth for us to suck from anybody once that happens. Yeah. And then that's when it's like truly end game, basically. And now everybody will be forced to shift. There's no more like musical chairs.
Yeah, I'm curious. Just I don't know if you thought about this, but there's obvious, at least in certain scenarios, like economies of scale with these stable coins. So you talk about these, like this community banks pushing back, and I think that there's been some talk. Well, will everybody have their own stable coin, or are we going to like sort of unify around USDT or USDC or some future iteration? Like, what are your thoughts in terms of? Well, I should qualify this for 1 second. I know we just talked about there's going to be a competition for who can like pass back the yield and who can provide like the best incentives for you to hold their stable coin. But in the long run, do you see like Tether just running away with this, or do you see a like actually strong equilibrium with a diverse set of stable coins that's probably going to annoy us, but can still exist, within a global financial system?
Yeah, that's a really good question. I think like this is something I haven't spent a ton of time thinking through. So I don't have any sort of like answer that I think is like, a hill I'm going to die on. But like when I think about it from the fundamentals, the first mover advantage was very significant. Depth of liquidity is a huge comparative advantage to other stablecoin providers. Will that fragment over time from other constraints of other stable coins being issued in, other banking systems for other currencies? Will there be some massive, offshore, like, euro provider that starts to emerge in a significant way because, some sort of restriction gets put down? Like things like that are going to be happening, and it will continue to fragment, I'm sure. Yeah.
There's also like, I would just add, there's also a lot of, I don't know how familiar you are with like something like Athena, which
not super. Yeah.
Okay. So it's not a stable coin, and it's clear it's not a stable coin, but it essentially pays yield that is the funding rate of perps. So it provides some outsized yield. And like, this isn't a shill or anything, but it's an interesting derivative that acts functionally as a stable coin, but can kind of pay outside yields. My point with saying this is that there's a lot of experiments that are being run and are yet to be run. And Saylor's newest, what is it, Stretch or Strike? I can't remember any of the names.
Stretch is the newest, yeah.
So, I mean, this is not entirely dissimilar in the sense that we're like, there could be for payments something like USDT that is just sort of has these massive economies of scale. And that's what everybody wants to receive because they know it's USDT. And then other, carve outs that are unique and are functionally kind of derivatives of stable coins. That's where I see like the market for competition kind of playing out, and whether or not these community banks can kind of move fast enough to realize what's happening. I don't have a strong opinion on that. I'm like leaning toward no, but it's interesting. Like that could be areas where, they're actually not really stable coins, but they are, derivatives in some sort that people want to hold in a similar fashion.
Yeah. Yeah. No, I totally agree. It's like if there's an economic yield to be captured, then and you can functionally incorporate that into the economics of these technologies, then like it'll be a cool way to see all the experiments of people trying to find novel ways of like capturing that yield in some way, shape, or form as like the reserve backing of an asset. And then that boils down to like, the question then becomes, because it's like really easy and I think tempting for people to find unsustainable ways of doing that. Yeah. And it boils down to obviously, and like, it goes back to like Farrington's point of where does the yield come from? And, but like people are smarter now, and hopefully people will be a bit smarter now about how some of these things structurally work. But I mean, when people were getting like, I don't want to like sit on like a high horse or anything. And it was very obvious to a lot of people, I think. But like Luna was obviously something that didn't work to me. Like, I don't understand how so much of the market got misled on that. I wasn't very vocal about it. It just wasn't something I cared much about. But yeah, that was crazy. Like that was wild.
Yeah. I think we have at least learned maybe not to go in that direction. I'm hopeful. I've seen some sketchy propositions as of late, but I think for the most part, people realize that's not the direction that we should head. So you talked a lot about stablecoins here, but you also, we were talking about this beforehand. There are certain areas where you think that, be it remittances or cross-border payments or just like local circular economies, where maybe you think Bitcoin as a medium of exchange is more likely to come sooner. Like, where do you see this, and why is it? Like, why are people using Bitcoin versus stablecoins, right? Assuming they have equal access to both.
Yeah, like, okay, so like on the cross-border payment side, it's kind of so there's kind of like a few states that we see this moving towards. Like medium state is there's going to be certain banks that plug into Bitcoin and become like the correspondent bank for Bitcoin. And if other banks want access, they're probably plugging in through them versus doing it themselves. And that'll probably be happening through like an international level. And I think that, so it'll be like, that's kind of like the near term state of correspondent bank to correspondent bank within the banking system. And then medium term state will be more like most banks aren't even going through correspondent. Like there is starting to be a convergence upon whether it's through like the third party software that they're using or something, it becomes more standard. And they're just everybody's plugging into the same third party software, and that software is enabling this type of sending. So it's going to be actual like bank to bank using some sort of Bitcoin settlement. And then like long term is more like what we view being digitally native, like bank kind of just becomes redefined. So the kind of like the way that we view some of this is, I'll start on the topic I already discussed with like settlement finality. We think that we think that'll be really, really important. We think that like that's probably something that's going to be a bit, it's going to take a long time. And it's something that won't matter until it does. But it will kind of require a larger degree of maturity within stablecoins globally before it really starts to become like a systemic consideration that people are looking at of how much focus do we want to have on effectively settling in the new version of SWIFT through these stablecoin operations that are all being run out of the US or have all of their liquidity being run out of the US. And so like there's going to be kind of that dynamic happening. I think another really interesting thing is just like when everybody had like, if you look at like DXY or you look at like currency baskets and we try to say like what is neutral, what is the actual inflation of things? everything's just like self-referential within currency systems. And I think that as Bitcoin gets adopted more, it's going to be kind of a natural like FX unit of account that people start to be looking into. And it's like, well, in Bitcoin terms, it was this. And like, that seems crazy today at 2 trillion, but like if Bitcoin gets up to like 20, 30 trillion, it's going to seem a lot less crazy. And I feel like that'll be another kind of like one of the major shifts. The other thing, like, I guess more like boots on the ground that we see today, for capital controlled countries, settling in Bitcoin is often outside the purview of some of those regulatory environments versus an alternative stablecoin. Like, it actually makes more sense to send a cross-border remittance in Bitcoin, which might be viewed as a commodity or as property in some form, versus stablecoin, where it's like, oh, this is $1. Well, now you have to meet these requirements or pay these fees or things like that.
Yeah.
And like, that's kind of one of the more boots on the ground things that we'll see is like, actually kind of makes sense for us to use Bitcoin in a lot of these situations. But a lot of that's driven by like the downstream demand for the cross-border payment. Like we'll have it's basically like providers are using both and in different situations, or at least from the companies that we're looking at. And in different situations, kind of like switching between the two. The other thing is we did a fun little analysis to basically show you that like, if you're using a lot of these settlements as kind of like a working capital account, which you are, and you're using things like, Lightning Network, which people who are doing this with Bitcoin are, or there's alternative protocols emerging too that I think can fulfill a similar functional role. So it's kind of like moving on-chain fees aside, basically, and using like the most scaled version of it. If you're doing that, then like holding Bitcoin in working capital account means you make more money over time. And I think that like some businesses are just in the same way, like people have Bitcoin balance sheets and things like that. Like it'll probably make more sense for them to say, oh, well, let's do it in Bitcoin, like costs are lower or the same. And we found out that if we were to settle in this, we're going to add 1% to our margins every year. And it kind of makes sense for us to do that if we're a larger scale company. So like there's a bunch of different reasons that we're kind of like, there certainly is a role for Bitcoin against stablecoins in like cross-border payments, and longer term, I think that some of these competitive advantages Bitcoin has are going to be more pronounced over time.
I think one question I have, and maybe this is more like I don't know, risk or what, but you have this vision, which I think has a lot of merit. Let's put it that way. Like I personally believe we're headed toward a future like this, hopefully. But one of the, concerns, at least from my perspective, is less so on the store value side and more just on the continued integration into finance. And what do you think are the risks to this future, for example, the Bitcoin banking system? What do you think are the risks right now to that? I mean, what I'm getting at here is the Michael Saylor and the ETF slurp up all the supply, and people only ever view this as a digital gold, and it is functionally useless apart from holding it. Maybe it can still fulfill its store value properties, but that's not so compelling compared to changing the entire world of finance, right? Like if we had a gold that could be used within the financial system. So we're all hopeful about the future that you speak of, but how do we ensure this happens? I guess is maybe a more succinct way to put it.
I think so. I think the first thing I'd kind of point people to from a resource standpoint would be the paper written by Lynn Alden, Steve Lee, and I'm forgetting his name. I think he was with Dragonfly on just like...
No, he was with Electric. It's actually...
Electric, that's what it was,
yeah. It's one of my friends. Go ahead.
Yeah, like that paper is... like when I wrote my book, I created like a kind of a rudimentary version of that, one of our chapters, to discuss like the different stakeholders and the balance of powers that kind of exists between consensus within Bitcoin. And and I'm so glad somebody like did a whole project on that and wrote all that out, because I think I had 4 stakeholder groups and they're like, we're going to define 6, and it's very complex. And it gives you like a really good perspective that the key takeaway is that like we are just witnessing this experiment of governance within Bitcoin currently. And it's worked like really well so far, and there is no authority that understands how this is going to go in terms of like what percentage of the supply of Bitcoin needs to be owned for it to be co-opted effectively, versus as long as some sort of potentially even minority stake outstands, is that is that enough of a deterrence mechanism for the permissionless characteristics of Bitcoin to sustain? It's like there aren't answers to that. None of us know, which isn't the best thing to say on a podcast. So like, I think that like the reality, like the risks that I'm concerned, like mining pool centralization and things in those areas are, you know, larger concerns. When it comes to like the actual investors and their influence over it, and how much of it really is just like custodial Bitcoin that's being used. So I'm trying to think of a way to like answer it in more short form. Like, I don't view custodial Bitcoin inherently as bad. For the risks of Bitcoin, it's just like the concentration of the custodial Bitcoin over time. So I think you could probably make the case at certain extremes. The marginal argument I couldn't make, but at certain extremes you could say like, if 70% of the supply of Bitcoin is being held by like one custodian, then I could be like, yeah, like they could effectively influence the outcome of Bitcoin through you know, how they're transacting it and what avenues they allow the transitions or the movement of that Bitcoin to be happening through. If Bitcoin is large enough still, though, I mean, how much economic activity can happen in the minority of the 30% market? Like if we assume that minority is all, you know, permissionless self-custodial Bitcoin, and it's like the original hodlers who all just held out, how much activity can happen? How much will that impact the fungibility? How much value would ultimately move out of the custodial Bitcoin into the minority? We could certainly get to a scenario where we're like, certainly it would impact it and it would control the behavior of a lot of people. But there could still even be a reaction in that situation that would just cause a large wealth redistribution.
So well, I guess if like one thing is if the 70% threaten to dump on one fork, that would be, at least in the short term, very, very bad.
Exactly.
Like, assuming it's not the, like, I don't know, ideological cypherpunk Bitcoin and they threaten to dump that for the BlackRock Bitcoin, like that would be extremely bad in the short term. And there's always this notion, well, like then ultimately what happens is the most free version of Bitcoin will ultimately come back. But like, dude, I do not want to be on the wrong side of a 70% like absolute one click nuke. Yeah, I mean, what? It's worth $10. Thank you. And okay, yeah, maybe it comes back, but I don't want to be involved in that. So that's a real, like, that's a legitimate concern. Saylor doesn't concern me. A lot of these concern me less. I don't care really about what Saylor's doing. It just like doesn't have much impact on my life, and I'm not like a MicroStrategy. You know, what is the Twitter group that is like massive, it's like irresponsible.
That's my least favorite Bitcoin cult for sure.
Yeah, and also
I love to shit on that cult.
Yeah, and I understand why but it just doesn't have any bearing on, you know, where I ascribe value. So, all right, there's one last. We're kind of gone for a while, but I have a couple last questions that we've sort of like touched on this concept, but when we were talking about gold, this part is really interesting to me. So I'm kind of curious to hear your perspective. One thing that has been stated, and I'm saying this kind of from the crypto side, is that a lot of the value proposition of a lot of these cryptos is that you need this like productive money. And I don't mean productive money so much from the yield perspective as much as just the integration in DeFi and, you know, lending, borrowing, trading, and all atop this ledger. And the interesting part to me is that we look at something like gold, which has been, well, functionally demonetized, right? And it's still, like we were saying before, is the highest kind of fungible asset valuation in the world to this day. And it's not something that people really realize is that, well, Bitcoin could still succeed without all of this, you know, DeFi and whatnot. But I do like, what are your different kind of not probabilities, but like different scenarios of the success of Bitcoin? How predicated is it on integrating into this banking system that you talk about, integrating into cross-border payments and all of these things? From your mind, like, is there a higher bound if we aren't able to achieve, you know, more than just this kind of, you know, reasonably denigrated digital pet rock or whatever?
Yeah. The way that I think about the scenarios is people in the market just like to discuss extremes. And I think the reality is that it's probably going to end up somewhere in the middle. And I think that like I wrote this paper on this, and this is all like just like a lot of the stuff I've written about in terms of like papers that get engagement or like more like longer term prospective things. Like this isn't necessarily something coming in the near term. But it's I think like the hybrid system is just like what have we witnessed with crypto, right? Like there was kind of like narratives around decentralization. There was narratives around new forms of money. I think the case for new forms of money existing everywhere has kind of been washed out at this point. The case for decentralization is getting less strong over time. I think we're realizing that economic incentives have guided crypto towards this race to the bottom towards centralization. And we're realizing that people actually don't care that much about it. It was access was something that was like a huge demand. Access. The access was the huge demand driver. And then when that changes or is more malleable in certain regulatory environments, how much will that exist? I think it's like people want to trade meme coins and do things. People want to gamble. And that's a huge market and people will always want to do that. But I think that like the fundamental, when certain barriers get put up around that market size decreases very significant. Like there's not people that are going to go try to take personal risk to go like gamble on certain things. So like we'll see how it evolves, and I think it'll be awesome. Like I think it's, and this is strong argument ad nauseum talked about, but just like the fact that there's like accrediting investor rules and like people are allowed to gamble, or there's like, barriers being put up against some of this stuff. But then there's some things people are allowed to do that's like making poor people like super poor for the rest of their lives. They just like don't understand. It's just, that's what's fucked up. It's like they're just regulating the wrong things. But there's like, so going back to the argument, like we kind of had this race to the bottom, I think, in terms of like centralization, and there are certain demand drivers that people are realizing are different from what crypto initially thought it would be. And so if that's the case, then it's like, it doesn't really matter what we can do. Like I was making this point in debate with a bunch of devs one time on stage, and we're like they think about the perspective of like need, like what we need to do or like what's possible. And it's like, that doesn't really matter. What matters is what's demanded in the market. And what's demanded in the market is, unless we can create permissionless systems that are equal to or economically equivalent to centralized systems, and provide the same user experience and everything. Unless we can do that, then I don't think we should have a lot of faith in the vast majority of the market. And when I say vast majority, 80 to 90% of the market being involved in permissionless systems. And maybe that's enough. But I think the reality is that cryptography is really cool when applied to other, like we took cryptography and we applied it to value, and we're like, okay, so we bootstrapped value natively by replicating certain characteristics within Bitcoin in a digital format that we know have driven demand for scarce commodities over time. And what we realized is that cryptography allows us to selectively reveal information about ourselves. And that's really cool because that allowed us to create a public ledger, which we otherwise wouldn't be able to do. And because we have that now, if we automate some of these functions of value with software, when applied to that, that's value, that's efficiency. It's just much more efficient than a lot of the other systems we've built. So we can automate more things at kind of like a systemic level because we're allowed to selectively reveal that information. It can be like encrypted effectively. And so I think like that's kind of how I view the innovation. I view like, the centralized control and eliminating trust from everything is probably not what people want to do, unless the solution is exactly the same as the trusted solution. They create a trustless one. So like, so I think like the hybrid, like I wrote this paper on like eCash or whatever, which is kind of just like, and the reason I think it's cool is just like, it'll take forever for something like this to actually emerge. But like, what's really cool is it's kind of like that barbell approach. It's like, it's super cryptographic. It's, super easy to automate. It's super simple. And it's like a centralized custodian. And it's like, okay, so we can kind of probably create a lot of the UX that most people are really looking for. And going back to that original point I made on I'm not concerned about that system acting in the best interest of users of that system. If people can permissionlessly participate, if anybody can like spin up one of these mints that allows you to transact in eCash, and the marginal cost of doing so is so low, which it is, then we'll end up with like a hyper competitive system. It'll be kind of like the modern version of like what a free bank would effectively be. And it's like, that's that race to the bottom towards centralization with all the other things that we're looking for. And free markets can probably solve most of the problems that people are trying to solve with like permissionless systems right now. And so like, that's maybe more of like a hybrid, which it's taking certain characteristics of crypto that were interesting and applying them in more of a centralized way. And then you kind of, I think when I thought through all that, I realized, okay, so like decentralization is actually just a question of scope. We like zoom in on a certain scope and we say that's decentralized. If you zoom out on a certain scope, if we have millions of eCash banks all competing around the world, that's super decentralized. That's a bunch of different points of custody. And like, so it's really just a question of scope of how you think about certain things. And a hyper competitive system is really saying like a decentralized system at a certain level.
I think one other point on this is just like my personal opinion, but I think that I definitely have changed my mind, at least to some extent, on the idea that everything is like a test net for Bitcoin, and that eventually everything comes back to Bitcoin. And you spend enough time in this. I don't know. I'm spend more time on the crypto side personally, but it's not like so important to me that everything's on Bitcoin. I don't think that stablecoins have to be on Bitcoin. Cashew, right, is like an example. Is like, is that on Bitcoin? Kind of.
Exactly.
You know, it's like integrated with Lightning. All these things, it's just a lot of it was just like technical jargon, but we put it into short, kind of like pithy phrases to sell people on something like early on, which was understandable. It was like, you know, this kind of cultish, like everything will eventually come back to Bitcoin. I'm like, you know, if Solana wins for stable coins or like some use cases for stable coins and it's just abstracted away from the users, like that's okay, right? Like I don't feel as strongly about everything on Bitcoin. And in fact, I think there's a lot of scenarios where we probably don't want everything on Bitcoin, at least not in the literal sense. So that was like definitely that's why I have been, you know, fairly like open, or, you know, try to follow a lot of this stuff because it kind of intrigues me.
Yeah. I think it comes down to like, what does on Bitcoin even mean? If we're wrapping into a system that's using its own novel form of money as for payment within the system, then I think there could be like a really long-term argument that the forms of money people want to use is what they're going to be using. Like, which bank just announced they're doing they're launching their own base effectively.
Stripe or Arc?
Yeah, Arc. Yeah, exactly. So
the
Arc
Circle one. Yeah.
Yeah, with the Circle, it's just like, yeah, that makes absolutely perfect sense. So using money that people want to use for the payment of things within the blockchain. Oh, and it's completely centralized because people just want it to go fast, and then it can interact with these systems that have bootstrap markets for access. And like, so like, there's going to be a lot of growth in that, and there's going to be really strong path dependencies. When I think about it, when we have systems like Ethereum and Solana that have, you know, bootstrapped markets that have seen significant demand, like there's going to be really strong path dependencies around those. And I think the argument against this is how persistent that will be over time. I suspect just because so much of what's being offered is commoditized in the end use cases we're just scratching the surface of, that probably won't, like today, it looks like an outsized demand driver, but you know, in 5 to 10 years, it'll probably be a lot smaller in comparison to the value that's happening on other areas. And then it's like, okay, that wasn't really that differentiated. And that people really just wanted like centralized ledgers to work off of, and a lot of shit might shift over to those. So like using like having like this unnecessary token, or at least not unnecessary, but having a token that is, you know, trying to fundamentally represent a new form of money. I view those market sizes as just like akin to loyalty points. And I think what's really like, or, you know, some other form of like token reward program within a system. And I think the problem is that all those systems work in like oligopolies or monopolies with like a certain level of control. And it's actually funny because I mentioned this on the very first podcast I went on years ago, where I was kind of like, we were having this discussion. I didn't understand a lot of this stuff that well yet. And And I was just like, yeah, it'd be really interesting to see like what would happen with loyalty points if they traded in free and open markets and they weren't relegated to the systems where you can inflate people out of them over time. Like that's why they exist, because you can inflate people out of them over time. Same thing as like reward programs exist because there's a breakage rate assumed. We did that with our companies in private equity all the time. It's like, get a reward program going. You're going to assume 5% of these people aren't going to pay you. That hits your bottom line immediately, or are never going to, use it. And, so like
the car washes where you sign up for the monthly.
yeah. Like it works every time. There's a reason it exists. And like
I had one of those, and I swear to God, I used it like 2 times. I had it for like a year, right, in college.
right. Like that's kind of how I view a lot of when you take the money argument away, and if you remove like the securities argument away, then you're pretty much left with like markets like that, and then so there's nothing compelling to me about that. I don't view those as very large. And I just don't think that they can really persist unless you're in an oligopoly. I don't think free and open markets are, the use case for those types of things. Outside of that, it's just like, then we're left with contracts. Like, and it's like, cool, like that's going to take a long time, but we're going to have like, common law and securities law build out. And we're going to have contracts that represent revenue or equity or debt, and then we're kind of have this quasi world with project crypto emerging right now, and we'll see what happens with that. That's like, I think it's a really interesting like the very like fundamental business ethics questions of like stakeholder versus shareholder value theory, and how like the panacea, I guess, for crypto is to like allow the stakeholder systems to emerge. But I think it goes back to the prior point of most people don't care or have the effort and time to participate in these systems the way that you would want. Yeah. And even with equity holders, it's really just the majority owners who control and influence everything. And if you want to make something happen with equity, then you have to campaign to like the top 10 pensions and ETFs and shit that control your stock. Like it comes down to the economic incentives that I think are going to make that vision just like nobody's really going to give a shit. And it's really like, okay, so we're really just going to do equity at the end of the day. If we get the like, regulatory, if we don't get the regulatory relegation and it's allowed to exist in some new format, more power to the industry. Like that's cool. I think it's good. I think it's a more free and open market. But I'm not super confident in that over the long term. And I think that eventually it'll have to come to the systems until we're like really in a, like, decades from now type new system. I don't really see how that falls outside of a lot of like securities regulation over the long term. But so, sorry, I've been going, but like to the original question, it's like, I think that like, because like build on Bitcoin, it's like, okay, so if some private blockchain is putting Bitcoin in, pegging in or whatever the mechanism is, and it's creating demand for Bitcoin in some way, shape, or form, then it's like, it's kind of on Bitcoin. If there's like competing monetary tokens that are existing on those blockchains, like it would be with like Ethereum or something, then, that is competing demand to some degree. But I'm confident that like path dependencies will last for a period of time, and on some time horizon, like Bitcoin could probably overtake it, and maybe it'll exist, but it's going to be infinitesimally small compared to like the broader use cases of it. So I don't really care that much. Like building natively into Bitcoin, like today matters a lot to me, just because I want to use my Bitcoin more. And I think it would be really cool to have a lot more like native self-custodial use cases for it. I want to play fantasy football with it. I don't want to have to like Venmo my buddies and stuff like that. Like I want to do a lot of things with it. I would like to, it would be cool to just take my Bitcoin and plug it into something easily to where I don't have to go through multiple steps of, wrapping and everything like that. Like I don't want to deal with all the DeFi bullshit. I just want to plug it into like something that's a little bit easier. Like that's really the argument for it to me today. But over the long term, I think like the lines are just like super blurred. And I just think, I think like going like with a lot of the more broader crypto arguments, I just think none of them really make much sense to me. And like really all it is using cryptographic signatures and automating things with software and building things from the ground up is making financial functions more efficient. But I don't see a ton of like huge groundbreaking things. Like there's cool innovations. I don't want to be like, shitting on everything. Like this cool, like a DEX is a really cool innovation. Automated market makers, that's a cool innovation. Like there's a lot of really cool innovations that have emerged out of these systems. We'll see how they compete against their centralized competitors who get on these standards over the long term. And they compete based on like access, I think, at this point. When they were formerly competing against based on token subsidies and the belief in an inflationary token having monetary value, like now that that's kind of subsided, it's really just access. And then the question is like, how long will that last? And there could be cool new use cases. Like if things exist like valuable things exist in a digitally native way, then there could be cool new use cases that like, emerge that we're just not anticipating yet. And like, I think gaming could bring some of that because there are a lot of like,
I keep thinking that, and yet like nothing ever transpires. It seems
that's totally true.
So like, I've genuinely thought this. I mean, it's crazy because this has been one of the like the Web3 gaming VC pitches for so long. And I'm like, dude, that makes actually a lot of sense. Like Fortnite, what if you could self-custody your skins and trade them around outside of the market? And they could, there's a lot of things intuitively that I'm like, oh yeah, that actually kind of checks out. It never happens, but maybe that's just the quality of builder. But gaming, I think there is some reticence there because I do think that gamers have a genuine, like, they're like one of the last holdouts of not wanting to financialize stuff. And they really do like want to be passionate about the fact that they game and having these kind of and of course there's a ton of gambling on it, right? Like there's esports gambling and stuff, but in terms of the gameplay, it's not completely gamblified yet. And compare that to like virtually anything else in the world that is gamblified. They're one of the few last holdouts, so maybe we'll see. But yeah, I keep hearing this and then nothing transpires, so something will. But yeah, I'm not like, I'm not allocating all my resources towards that,
Totally. Like, I mean, part of it is just like, I think I don't know. We're not very like deep into the gaming area, but like it's, part of me thinks that one, like a lot of the developer talent is just like existing within other areas because there's a lot of money being made right now. That's probably one major issue. And then when it comes to like trying to like rebuild all this stuff from the ground up after just like decades of iteration producing these outcomes, like it's probably just like really concentrated in terms of like the like knowledge that exists around building good games that people want to use. Yeah. And like so it's like here's what would work tomorrow, right? Like World of Warcraft says, we're going to allow you, we're going to have like Bitcoin in World of Warcraft or something. And like, we're going to create a random generator where you can go find new swords or whatever the fuck you want in the World of Warcraft. And then that's going to be controllable on your own account. Like we're going to have our own wallet. We're going to have all this kind of shit. Like if they were to announce that tomorrow, I think it could potentially work. But I think the problem with all of that is they want people to exist within their ecosystem. So to give them assets that are transferable outside of it is probably why they just really don't have much of an incentive to want to do it. Like how many new users are they realistically going to get because of that? And I feel like if it were to come, it would have to come from some other standard emerging for it that is not in gaming. And then to get those people into gaming because they have an asset, it would be like you're like an avatar on Snapchat that you have and like that becoming like your identity. It's just like, oh, like let's, assume that like, you cut an agreement with Snapchat and it's like your avatar is your new social media profile or whatever. Like there's some sort of other use case that you're building an identity around this where you want to get cool new shit for it. And you can go get that because they have a partnership with World of Warcraft and you can, go discover a new sword. Now you got a sword that nobody else has on Snapchat and like, stuff like that. Like I could see it coming kind of in that direction. But yeah, maybe it just doesn't matter as much. I don't know.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds You can find him on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like The Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
So we've kind of talked about a lot of this like long run vision, and there wasn't much so direct. And of course we don't know this, but in terms of predictions, like, and I think you wanted to touch on this, like give me some, I don't know, it could be, I mean, it doesn't have to be price of Bitcoin or anything, that just like adoption or what are some predictions you have? Because you touched on these, and but yeah, whatever ones you find the most important, maybe.
I think the biggest ones are just like, there's going to be a new Bitcoin correspondent bank model that starts to emerge. We're going to see a lot like Erebor with Peter Thiel, like things like that. There's going to be these types of models that start to pop up. We're really interested in companies that are building like payment hub or core banking systems, or companies that are integrating into that and providing services around it. That's super interesting to us. We think that like bank adoption is going to spike trading volumes very significantly over the long term with Bitcoin, like probably like 17x within the next 5 years. That's going to grow massively and get more on par with gold. We think the lending market is going to expand massively from this, and a lot of the non-bank providers are going to have a ton of competition from banks within that. Bitcoin lending was like around 50 basis points in proportion to market cap based on some estimates we put together recently. And we think it's like long-term equilibrium is probably closer to 150 to 200 basis points. So like just in current market cap terms, it's probably going to 4x, we think, as more banks participate. And then when the market cap grows, that market grows too. I think other big ones are just like, we think that like all like this Bitcoin treasury company trend, it's just like that'll persist. It's going to grow. It's going to wash out. We think like the big risk is probably going to be less that like MicroStrategy or any one person becomes some huge systemic risk within treasury companies. We think it's more going to be that a lot of the Bitcoin companies start using service providers that become systemic risk. So like there's going to be like a whole asset management side to this industry, because like how are these guys going to grow out? They're going to have to compete on either like they have an operating model that requires Bitcoin and that's synergistic, and there's really cool businesses like we're looking for that in the market. We're just like, you guys can be liquidity providers, like rollups like Citria, or Lightning service providers, or like all these different types of business models or exchanges that need liquidity. There's a million different financial services that you can plug Bitcoin into and earn yield on it in a very sustainable way by taking on some degree of risk. So like in the report, we have a yield curve, and we're like, here's just a bunch of different functions people could deploy their Bitcoin into. And there's probably going to be like a class of asset managers that emerge out of this over the long term. Maybe it's current exchanges. Maybe it's like a pretty native thing. We'll see. We have talked to some companies looking this direction. But that's definitely an area that we think will probably grow pretty significantly. And then some of the other ones are just like that we talked about, like the longer term ones is just like, we think Bitcoin's just going to start becoming an FX unit of account through bank adoption over time once this correspondent system starts to adopt it more. And we think it's going to become a dominant stablecoin reserve asset, which is kind of like one of our big hot takes. And I think in hindsight, it'll be a lot more obvious as you start to see these incentives play out. And then long term, we're just going to have this system of like, that we're talking about. Like I wrote this paper called Banks Without Bankers. And that's kind of the idea, is that we just automate a ton of financial functions and might be more trusted. But it's going to have like this digitally native system, something that I think is certainly can exist. And it's probably just going to have a bunch of different like protocols, whether it's other, crypto chains or that's, Bitcoin native ones, quote unquote. Or it's more like trusted centralized custodians. It's all just going to take a long time. It's not really a prediction, but like that's kind of the long-term view. Like the big thing, the reason I want to invest in companies and why I'm in all this is I think Bitcoin can create the very first neutral, apolitical monetary system the world's ever had. And that's going to just change how everything fucking works. And it's going to change. I think it's going to grow wealth and make everybody's lives a lot better.
That is an inspirational way to end. Thank you so much for coming on. Fantastic conversation.
Yeah. Thanks, man. This is sweet.